Hi, this is Charlie giving you a weekend video. Didn't get a chance to do live trading yesterday. I was out and about a lot. Um, so I've got a couple of things I want to go through here with you today. Firstly, as you can see here, I've got a chart with volume on, volume indicator. So it's going to give you like a little handy tip with regards to volume today. But also, before I go into that, I've titled this something about the trading challenge. Sam said she's had a couple of inquiries about the trading challenge. When is the next update coming? The next update is going to be on the anniversary, so that's next June. So, and the reason I'm doing it that way is because I'm constantly in swing positions. When I did the 10k to 100k trading challenge, certainly in the first year or so, there were times when I was flat, and it was when I was flat that I'd be able to do updates on the as we were going along. My trading style is, even to back then in 2014, is even more swung towards swings and much more swing trading going on. So I'm like constantly in positions. Even if I close one, then I'm already in others. So I'm usually in anywhere from 3 to 5 positions, I guess, at a time. So it's easier to wait until I'm flat next June when we get to the anniversary, and then we can do the final update then. So we'll see how we get on the trading challenge then, and give you the full update then as usual. So here, I wanted to give you something else here on a Saturday morning, which is using volume. And before any of you say, well, there's not real volume because it's FX, well, it is. It's still tick volume. So it's still indicative volume of the amount of transactions which are taking place. So it's a useful indicator. Now, I was trading in our live trading room in the week with, was it Thursday? I don't know what date that was. Yeah, Thursday. And we'd got long euro dollar. And then it was moving along, and what I was talking about, the fact that sometimes when you're pushing up like this, we were pushing up towards 111, and actually I had 111 was actually my target. But what happened was, as you can see, these candles are starting to expand as we're pushing up. And I said, if we get something like a volume spike, we can use that as an exit, hoping that the volume spike might come on a green candle, so then you end up getting out right at near the highs. But what happened was, bosh, this red candle came in, and look at that volume spike there. But you know, that was a nice enough. We'd been in from, oh, actually we'd been in from 2 positions, right from I don't know, much lower down. So one from about, oh, I'm trying to remember now. One from about 60 or so, 110.60, and then another one from 110.80 or so. So used that, said, okay, right, it would have been nice to see it go up to 111, but we're gonna recognize the volume here. So a smaller candle, but look at the size of the volume. So it tells us that sellers are coming in, probably just coming in ahead of the big round number there. We've dried up, not enough buyers, sellers are coming in there, big volume coming in. But it would be the same, even if it was a green candle, I would still be wary when you get in high volume coming in, because even on a green candle, yes, it means there's more buyers, but it also can mean that we're close to a saturation point, to a climax. So either way, I would read it that way. So just a little handy tip, if ever you want to use volume on your charts, you can use it on FX. I appreciate if you've got free charts, you probably won't have volume anyway, but some charts do have it. So that's a simple tip. If a market's in a nice trend and it's having a nice run, then you get a volume spike. It probably means we're getting close to a pullback or the end of that move. Anyway, that's my handy tip for now. Enjoy your weekend. Back in touch next week.